Hey everybody, welcome to Market Mavericks. Mike is popping back on in just 1 second. I'm joined by Scott Melker. How you doing, Scott?
Good, man. It's been a long time. I'm glad we're back on air.
Yes, it is. And I see Mike's logging in, but I don't see a picture of him yet to share, so I will as soon as he pops on. But he's got his forecast just like everything. But as long as I have you here, Scott, let's talk about this recent drop in Bitcoin. How low is it going to go? Or is this just pause before later this year we're at 200,000 like so many people are saying?
I'll err towards the latter, and it's hard to say when prices are down, but I think that this is pretty par for the course on previous corrections. I think the reason that people are panicking so badly, obviously, is the state of the altcoin market, right? But you can check here, like I had posted this for 2017 corrections. This was last March. I posted this when people were panicking. You take a look, anywhere from 41% to 27%. Right now, we're at a 25% correction off the top. This wouldn't even make the chart for a 2017 standard bull market correction, but we're around the medium for the corrections of that 2021 bull market when you're looking at, 21, 31, 26, 55. But that said, it's hard to get panicked when you're 25% off the top. Chart doesn't look stupendous, of course, but still, testing the 200 MA here on the daily. We're oversold for the first time here on the daily chart. If you're taking a look since last August, that was the bottom when we were in the 50s. Was last time we were oversold there. Fear and greed index is the lowest it has literally been in years at 10 for crypto, aligning with that. I saw from Lunar Crush that social sentiment was at the lowest since last August, exactly when our RSI was oversold. So listen, I'm not saying a permanent bottom is in, but I'm saying you have a very reasonable case right now for a serious bounce when everything is seemingly oversold and irrationally fearful. I mean, 10 extreme fear when Bitcoin is at $83,000, $84,000 just blows my mind if you go back a year and think about what a dream these prices would be.
That's true. It's true. And I was just looking at, you were talking about the normal corrections, and I was just curious. And I was like, well, what if we go down to that previous all-time high, which is going back to the March 2024. So not even a year ago, almost a year ago. And that would be a 33% correction on Bitcoin, which honestly, like you're saying, is basically the run of your mill, even on the lower side of what we've seen historically. So that makes a lot of sense. I know Michael Saylor's not a trader, but man, like if he just waited a little bit, he could have bought so many more Bitcoin. Oh, well. Neither here nor there. I know he's a long-term holder there. Mike, how you doing today, buddy?
I'm good. It's we're having a little technical issues. You're coming on really fast, like you're coming on 2 times speed, which is really cool to hear you speak so fast. So I hope
drink a lot of coffee today. A lot of coffee.
I'm loving it. Yeah. So I gotta show a few charts, and it's what you showed earlier. And it's the island top versus island bottom factor. It looks like Bitcoin's putting an island top. And that 100,000 threshold, I think, could mark similar to me. This whole market is just like the stock market was almost exactly 25 years ago today. And at the same time, you've seen an island bottom in total holdings of gold ETFs. Remember that the history of what's happened here is just phenomenal. That, it was the greatest ETF launch ever in history. That might have put in the peak. Remember, insiders made money, and when it gets to the mainstream, you want to watch out. And the gold's starting to flip back up. The key thing I also want to point out is the gold, Bitcoin to gold ratio, another island top. I mean, these things are not good, and it's just kind of the indications you get sometimes when you're selling. You should, when it's selling, should be selling when they're yelling. We got a lot of that. Now we're just going back to normalization. I think, Scott, what you pointed out is key. Yeah, okay, so the short-term stuff is probably getting way oversold. Great for buying opportunities and stuff, but the key thing I also want to point out here is what's happening with S&P 500 versus gold. It's breaking below that key support that's around 2 ounces of gold per one S&P 500, and it's just these things are all linked. And so I'm making the call of a lifetime that this stuff is going to continue. And I want to point out one key thing that's happening is you look at the other way around. Gold divided by S&P 500 might be breaking above this key resistance. And I'll end with what I still think McGlone, you've been wrong for 2 years. Admitted. The next big trade I think was going to be is going to be U.S. Treasury long bonds. Yes, TLT now is up about 5% on the year. S&P 500 is down. That's nothing compared to what I've been hoping for, expecting way early. Yes, I get it. And I used to do it. Now I just say it. So complete respect for you and those who do it. But this I want to show you here. This is a chart of the Bloomberg total 20 plus year bond index. It's like the TLT, total return. It's the lowest versus the S&P 500 ever. Now, our database is only going back over 30 years. It's like, yeah, just a little reversion. That's a big trade. And that's the key thing we spoke about before we hopped on, but it's the key thing to remember about this year. This year, I think it's going to be an awesome trading year. Buy and hold, forget it. Just look to trade and make some money being speculative, and don't get married to positions. I think that's the way to look at it for now.
Really quickly, Mike, I'm actually looking right now at the Bitcoin to gold ratio. Do you recall when you and Dave made the Macro Monday bet of whether gold or Bitcoin would outperform for the year? Because I think it might have been last March, and I think you might actually have won or be winning.
I prefer to lose those bets, actually, because that your show's great, just like your show's, Gareth. I love being on part of the banter, and a couple $100 I don't care about among friends. Come on, that's just fun, but that's okay. I appreciate you remembering, because one thing about getting a few right is I get a lot wrong, and that one just, that one I was thrown down on the mat for quite a while, and it's usually how it works. McGlone, and sometimes you're early, but when it's the delayed reaction gives you some of the biggest positions ever, and that's when I point out things like I showed here. I think we're going to have epic. I mean, I'm making the call of a lifetime, and then just based on normal reversion, that is, we're just so expensive in the stock market and so cheap in bonds. And Bitcoin to me looks like the whole crypto space. 12 million of them on CoinMarketCap.com. It looks like internet stocks did the internet bubble did 25 years ago.
Yeah, one thing just to point out, being the chart player here, is you can see TLT, it has broken out. So there is a breakout here on TLT, and that should, you might retrace a little bit, but this should mean continuation upside, which again, TLT is essentially inverse to rates. So it implies rates would be going down here in the future. And I think one thing to keep in mind for a lot of people out there is that generally over the last couple of years, when rates went down, the stock market went up, right? But that has changed just in the last really couple weeks, because and correct me if I'm wrong, gentlemen, but it looks like the markets are now worried about growth, and with inflation bubbling up, which tells them the Fed can't cut rates even if they want to, but now the growth is slowing towards potentially a recession, and that's now a negative, right? A recession is bad, even if it causes rates to go down, because it means earnings per share or earnings of the S&P would likely decline as well.
So I want to hear Scott's view on this, but I think it's so important you mention earnings, because it's the most important thing I think about tariffs is, why have your profit maximized U.S. companies focused so much the last decades on exporting and offshoring goods and production and everything because of earnings? Now, when you shut that off with tariffs, that's going to hit earnings, and that's also the key focus of my colleague Gina Martin Adams at the beginning of the year. There's just way too much optimism for earnings. Then you add in Doge. Now, we have the world's most significant employer and money printing machine cutting back significantly. I've never seen anything like this, and they're doing it just like I hope they would. Move fast, break things, and worry about it later. And we got 2 years, and history is going to judge them, I think, positively. In the meantime, you should have discombobulation. So right now, we're still unchanged on the year S&P 500. And this is nothing compared to maybe God help us if we get to the 200-day moving average. We haven't done that in over almost a year and a half.
And today's news cycle was insane. I pulled up one feed and it was tariff this, tariff that. Every country you could name, EU tariffs, China extra tariffs, Mexico and Canada tariffs back on, and the market is relatively flat. I think the story in the market today is Nvidia good earnings, but not good enough. So that's down, and tech's down, and it's driving everything else down. But I don't think it's actually tariffs and all of this crazy news cycle that's really moving the market at the moment. I think Nvidia earnings is today's story.
I think you're pointing out something really key, and this happened in crypto too, is that we've seen crypto roll over significantly following really the inauguration, right? Because there was this amazing excitement when Trump was elected because of his favorability towards crypto. You had all the excitement into his inauguration and what he was going to do for crypto. And now afterwards, there's like this air pocket where investors are like, well, okay, well, what's next? What's the next driver of crypto? Well, now we've gotten through Nvidia earnings, and all of a sudden it's like, okay, well, what's next? All I see is tariff, which isn't good news. We can't be like, oh, but don't worry, Nvidia will report earnings tomorrow. No, that happened now. And you got this air pocket. So I think you're right on that. Yep.
So, Jared, every time you speak, we got to laugh because you sound awesome. It's like 2 times speed. It sounds like a cartoon character, doesn't it? But I got most of
enough.
that.
Maybe
So,
Jared, you might want to pop back off and on if
Let me
you
do
can.
that.
I don't know if it's running the screen,
well,
but you should do that and see what
but I want,
happens.
in the meantime, if I can share screen and show you a key thing that's about tariffs. This is the book we mentioned earlier. It's the first thing I read when Trump was elected, and that's Robert Lighthizer book, No Trade is Free. My colleague just did a bit on it, and Scott, we spoke about this, that everything he pointed out in that book is happening. And these are things I remember I wrote, it hit for me hard. The things I pointed out with clients decades ago when I remember being on the phones with clients in the trading pits. The quote we used to use is, yeah, everybody in the world wants free trade as long as they can have a surplus with the U.S. But that it's being shut down. The difference with Smoot-Hawley in 1930s, Dave Weisberger pointed out, is when that hit and kind of they say that accelerated the global depression, was the U.S. was a net exporter then. Now we're the world's largest importer on the planet. And Trump says we're shutting that off. So to me, that's a key thing to think about what's happening here. And it's got to get that pain over with initially. But the thing that's happening with, I think, I want to appreciate that I think people missed about cryptos. The thing I learned in commodities is typically in commodities, the companies that actually mine and produce those commodities make money and perform generally, typically, most notably in energy and agriculture, much better than the actual commodity because they make more and more of it every day with rapidly increasing technology and pressure the commodity prices. That's the key thing I'm happy in cryptos I think people missed. Before Trump was elected on CoinMarketCap.com, we had 2 million. Now we have 12 million of them. You just can create so many of them easily. And we had every single sign that the bell was ringing that, yeah, this space is just too expensive. So things like Doge and Shiba Inu, and most of them we should lop zeros off the value because they still don't even make sense to me. Yet you look at over the equity market, at least you have earnings. But the key thing I want to point out about Trump optimism is typically what happens in cycles, and as Gina pointed out, is once you get the optimism when you have a new president. Now he's not a new, but a president that shifts a new regime. When they come in, you bump up to, but within a month or two, particularly February, it's usually a real bad month when you have a new president come in because that optimism's over. And I want to point out the key thing about this new president is the cycles are completely against him in terms of the valuation of the equity markets. Now, the most in 100 years versus stock market cap to GDP. Last year, we created $12 trillion of stock market wealth, the most in history, 40% of GDP. And okay, and we're taking that off. So I guess I lost my screen. You can stop the share screen on that. And then you look at the valuations, and just here's what we talked about earlier, right before he came on. Remember last week or so, Gareth, you said you were talking about Walmart, and I just loved Ed Yardeni's take on Walmart. Well, it trades 38 times earnings. The average for the last 20 years is 18. Isn't that a little expensive for a retailer?
Yeah. And can I is my mic still bad?
You're good.
No, you're good now.
All right.
Although I liked it before, it was more fun.
Well, it's all the energy drinks that I'm drinking in this trading environment right now, because it's got to be like I know people are kind of looking at the markets and crypto and being like, oh my gosh, this is crazy. But for a trader, this is the volatility that you make your bones in. This is good stuff. So great points, by the way, from both of you guys for that. And so again, I'm looking at Ethereum right now on one of my screens here. It's getting close to what I could have as potential support. Let me show it to you guys. I just have to reshare since I logged out. But again, Scott, I guess the question, just going back to crypto real quick, is this normal, or is this like alternating the 4-year cycle? Like different?
I mean, the timing might be slightly different, but for now it's normal. But it's easy to say it's normal. You still see the bounce, right? I mean, you can take a look at a Bitcoin dominance chart, and we had dominance up to like 70. No, get rid of this line. I think dominance in 21 or in 20 went up to like 74%, right? I mean, you had this dip, rage, and then alts fell off a cliff. We just need to see it happen again, but it sort of happens every cycle that you have this Bitcoin move, dominance absolutely rages, and then eventually falls off a cliff. So we're waiting for it to fall off the cliff in this case, but it's really not as crazy as it seems. If you've been here before, it just hurts worse every time. And the narratives are clearly more Bitcoin focused. I think altcoins are looking for a narrative. Meme coins absolutely took all the speculators and degens out of the altcoin utility market where they used to play. That has gotten completely washed, as we've talked about, would 100% happen, Mike, right? Over and over and over again. So now you're left with a fundamentally bullish narrative for Bitcoin and people looking for excuses to buy altcoins, and it seems they're finding more excuses to sell them right now.
Well, I appreciate you bringing up Ethereum. Ethereum has been my favorite technical indicator for one simple thing. You're supposed to sell everything when it gets to 4,000 and buy when it gets to 2,000. Now it's getting near 2,000 if it starts knocking below 2,000, but I don't see any positive upside for Ethereum because remember one thing that Bloomberg asked me is kind of curtail coverage, so I don't dig it in as much anymore. So I've enjoyed the 30,000 view. I don't see the upside because you can say that Bitcoin's digital gold. I get that. It makes sense. It's the indefinable diminishing supply, increasing demand and adoption, all that stuff we've been saying for decades. But what's Ethereum? And there's 12 million or so better versions, maybe not 12 million, a couple hundred. And every day the technology is improving, like there's Solana and all the other ones. I just don't see the upside for the actual token of Solarium. I'm sorry,
oh my God, I'm going to go launch
Ether,
a meme coin called Solarium. I have to do that right now.
Of Ether, but to me, the technical's been great. When it popped up at about 4,000, that was a sell. Now it's near 2,000. That's a buy. That's a support level.
I think I can't remember the numbers, but many times you said what stops it from going to, was it 2,000? You kept saying over and over again because it did it. I mean, we basically got there. 2,100. Yeah.
Well, you snapped up some of those quick, didn't you?
I'm very much a buyer of Ethereum in the 2,000 to 2,100 range.
There you go. So trade it. It's getting oversold. It's a great trade, but that's the key thing. So what we're supposed to do is get a bounce. It's the next big trade. If it starts ticking down below that, now that's when you know you got something big.
Yeah.
Yep, I agree. I just want to bring up this chart here. I see some comments about the market's getting crushed. You're right. The S&P is falling now, down 1.3%. This is a trend line I'm paying close attention to. This goes actually back to October of 2023. And the reason it's called a trend line for those of you out there is because it's a trend, right? So it's telling you that this has been an uptrend in the market. A break of this can be very detrimental to that trend, obviously, and might be the start of something bigger. Obviously, we'll have to watch over the next couple of days. The NASDAQ 100, interestingly enough, had already broken its trend line here, and that was just days ago. And you can see today we gapped up, and what happens? It gets crushed as tech is selling. Nvidia opened up and is just getting crushed now. Take a look at Nvidia here. Look at this drop on Nvidia. Holy cow. Down almost 7% on a $3 trillion company. That is a big time drop. So there's some stuff going on here.
Yeah, we're still clearly in the nobody knows what's good or bad news phase of irrational markets because Nvidia actually did well. Earnings were good, objectively.
Yeah, but that's a classic how bull markets don't end by just rolling over. They end on massive enthusiasm and hubris. And we've got that. Remember Michael Saylor last year will go down in history as I went by taunting Warren Buffett, as he probably put in the peak for Bitcoin. The question is how long. But that's the key thing is now we've got asset prices that are just so elevated. I use Walmart as an example because I remember trading that during almost every other recession in the past. Walmart was always good to hold. And that's where I would go. I didn't have any much money left when he had 4 kids to feed. But to me, that's the key thing is the valuations are just too high. And now we're reverting. The question is how far you revert. And that's why I'm going to be publishing my commodity outlook for the month of March tomorrow. And I'm going to point out just normal reversion can be profound. One example, 1987 stock market crash. Stock market ended up 2%. People don't remember it that way, though.
Yeah, and I'm just bringing up, you were talking about euphoria being the end of bull markets. No better example than Palantir, right? Palantir surges up, I mean, hundreds of percentage points in a couple months, and then it grows to a $300 billion market cap, and then in basically a week drops about 30% here or more. And it gets just, I mean, people getting annihilated on this trade. So many retail folks were just jumping into this thinking it would keep going. And just like crypto, when the party ends, it ends quickly.
Yeah, look at that chart. It's still a significant uptrend. You look at it a year or 2 years ago, you made a lot of money, but people don't remember that way. It's when you buy at the highs and you have to hit and get stopped out on the way down. I have a good friend whose son, he calls me every day, whose son's way overloaded MicroStrategy. Can't get him to sell some of it. And I pointed out, well, he's probably got back to levels that where I sold it like a year ago. Oops. Yeah. But he doesn't feel that way. It's still the same profit, but he just psychologically, your mind always sticks where it was at the high. But that's why it's so prudent when you hear so much yelling. It's a lesson I've learned in trading pits, and I've heard it from customers. When you hear that much yelling and you got profits, you don't tempt the market gods always. And people just tempted the market gods too much.
So the big question, Scott, is did the Trump coin actually mark the top?
Certainly did for Solana and meme coins. Whether it did for the market as a whole, I can't say, but I think he launched it on Friday. Obviously, Solana raged up, I think, until Sunday because, people had to buy Solana to participate in buying Trump coin. And it's been nothing but straight down, basically, for Solana since then, I think, as all the liquidity has been sucked out. I think that Trump signaled a top, Melania pushed the envelope, and Libra was the the final nail in the coffin. So what's interesting is, I think Solana's probably a good buy soon, right? It's becoming irrationally oversold once again. It's getting annihilated, but I wouldn't be surprised if that was sort of it for Solana being the token of this cycle. Like if we get another alt season kicking in, I think I would rather own Ethereum from here than Solana on the way up if I had to choose one of the larger L1 altcoins, because I think enough luster is off the meme coin casino, which was driving a lot of that Solana upside. So now it would have to be more fundamental institutional adoption. I mean, we will likely see a Solana ETF, but that didn't help Ethereum, right? So maybe less meme coin casino and more fundamentals to get Solana back to that high, but 290, whatever, 297 looking pretty far away for Solana if meme coins don't come back in size.
So what's the problem with more and more ETFs, I think, is more and more competition for digital gold. That's the problem in the space.
Yeah, it's the same amount of it's not new money.
Speaking of gold, let's touch on gold. Gold having a big down day today. Mike, what is the deal here? Shouldn't gold go up when there's fear in the markets and panic, or no?
Not initially, but it's also end of the month near that, and people, it's way long. Speculators are way long. See that? That's a bull market that got extended. I'm glad you showed it up. Showed it. I mean, and you got to look at a daily now. I typically don't look at dailies, but gold's first good support is probably on the 100-week moving average or your trend line, which is what, around 2,700. Yeah. But the key thing I point about a gold is it's the most expensive ever versus the bond market. I mean, I go back 30 years, or the bond market's that cheap. That's why I keep tilting over to that TLT trade, and it's just catching up to the rest of the world's bonds. But I'm still bullish gold. It's just what happened in 2008 when you have a lot of profits and you got to hit bids, you got to margin calls, and the key thing is it's bumping up against 3,000 resistance, and almost every technical indicator says, yeah, it's getting stretched. I just look at it versus other markets. It's still. The stock market's still historically expensive versus gold, and the bond market's the cheapest in 30 years versus gold. So that's why I keep saying, well, maybe TLT is the next big trade, and gold going down is just backing up in a bull market. But I don't think it's anything significant. The key thing I want to point out about gold is what I showed you earlier, is that gold ETF inflows are just starting to kick in. Remember, we had 4 years of outflows. So I think this is just an early stage. It was similar to 2008. And remember what it did in 2008? It rallied a lot. Before the stock market crashed, way before stocks, it dropped 30%, and then it started going back up again. I'm not saying it's dropped 30%, but it's still bullish gold. First support 2,700, good resistance 3,000.
What about silver? I mean, so there's obviously a lot of people that really love silver, but it obviously hasn't performed like gold. What's your kind of thought process on that? What's your outlook?
Just like copper, I think it put in a pretty good. Let's put it this way. Silver is completely rallying on the back of gold, and it's way underperforming. Up about 40% on 1 year basis. That's great. But when you consider beta is up 40%, and beta is half the volatility. So I think silver is just stuck between 30 and 35. And it'll go up if gold goes up. The problem is it's not going up enough. And if gold goes down, it goes down twice as much. It's just
is it Ethereum?
Yeah, exactly, but I'm glad you did that. I compared it to Ethereum recently. I'm like, there's similar charts, and the key thing is, I'll mention this: silver is much more like copper now. It's an industrial metal. Every day that goes by, Dave always points out, gold's being demonetized. It's demonetizing silver, but copper put in a significant peak on February 14th. Copper, because of that massive spread between CME and LME futures because of tariffs, most ever at 12%. And every time it gets a wider spread, it peaks and goes down. So I think copper, which is like 450 right now, is going to 4, which means pressure on silver. And here what you're seeing is what happens when you wipe out wealth from the system. People don't sell what they wanted, they sell what they gotta.
That's true. I was actually looking at palladium too, and I mean, these charts on these alternates to gold are just incredible when you zoom out on them. I mean, I was looking at the palladium to gold ratio, and it's got to be like one of the lowest it's ever been. It's incredible considering the rarity of something like palladium and platinum. So yeah, just some food for thought there. You can see where this was back in 2022 compared to here. And then you compare that to gold, and gold's up and to the right? So, yeah.
So last couple decades, palladium's been one of some of my best investments. Well, when it got 2 times platinum, it's like, yeah, you get out of that. It was just way too expensive. Now it's getting cheap. But the point is, it's the macro that matters. That 1.8% yield on that Chinese 10-year note yield. I think our yields are going there, and right now the last is 4.28. There's so much room in our bond market, but there's so much room for normal deflationary forces to follow what's happening in China. Palladium's a big part of it, and then it's also the macro is, we're going to EVs. You just don't need the catalyst for emissions control anymore that palladium and platinum offer.
Scott, what do you think about the biggest drivers? Like, we got about 5 minutes left. I kind of want to think about over the next month, let's say, what are you focusing on in terms of the biggest movers for the market, for crypto in particular?
So I'm looking for some furthering, I think, of the expected promises from Trump. I think he has actually been following through, and people aren't giving him enough credit. I mean, we have Percent Atkins, Brian Quinten's, every single, commissioner is a Bitcoiner we have in place. The SEC has dropped cases against Coinbase, Robinhood, Consensus, Uniswap. Let me know if I missed one. There was another one today, all in the last week. So I think we're getting the regulatory environment that he promised. I think any movement on a strategic Bitcoin reserve would likely be bullish, although I don't think most expect it. And we are seeing movement towards stablecoin legislation and market structure legislation. So maybe if one of those things actually starts to look real, it could be a catalyst. But to be honest, as I kind of joke, I think, if Bitcoin bounces, we get oversold, we get a nice big bounce, higher prices, we get higher prices, and people start piling back in. We just need some sort of catalyst that's going to get things flying. But this is how it feels at this part every time. Bitcoin corrects, and it's all over. The bull market's over. I showed you the chart. 25% correction for Bitcoin is nothing, right? So, I mean, it's just, the minute, if we start to see Ethereum make a 10, 15% move, imagine what that does to the confidence in the altcoin market. It doesn't take much to catch a spark. Right now, I just think we are searching for a narrative or a catalyst.
Do you think that the crypto market investors, can they be satiated essentially? Like, can Trump do enough, or they're always going to want more?
No, they're always going to want more and faster. That's the problem. So for some reason, crypto people believe that these would be the main priorities of his administration, as if, tariffs and the border and the larger issues at hand would not be the main narrative. So I think they just need to calm down and be patient. I think we're in a situation where we have a lot of very short-term headwinds, Bybit hack, Trump token, Libra, things like that are pretty glaring, awful things that have happened of late. And then obviously market trading uncertainty generally, with these massive tailwinds of, regulatory, legislative clarity, adoption, more companies buying Bitcoin. I mean, you got the Abu Dhabi Sovereign Wealth Fund buying $500 million worth of Bitcoin. And these are huge, huge fundamental events that would have been all of the news a year or two ago that aren't even in the news anymore, right? I mean, Michael pointed and say, listen, that means Bitcoin's kind of just in the narrative now, so there's not upside, right? And maybe that, when big news isn't big news anymore because we're just a part of the cycle, maybe the volatility will diminish. But I think it's going to be, I think we're going to have a massive upside as long as the macro stays intact. I do agree, though, if macro goes really bad, that it could get exceptionally ugly.
So, Mike, what about you? What are the big things you're watching over the next couple of weeks, for instance?
I think in the macro, to piggyback on what Scott said, I'll reiterate what I've been saying for a while. I think the crypto space will stabilize and be okay as long as the U.S. stock market goes up. And we're the most overdue since I remember 1999 and 2006. I said that because I was way early, for just some normalization. It'll just get me back to the 200-day moving average in S&P 500 so I can reassess where to buy Ethereum or Bitcoin or even copper. Everything's so linked when you get this expensive. And I think the key problem I have with Bitcoin, I think it's most important, is it will never get better than what happened in 2024. With the most significant thing ever was that antagonist shifting to zealot, and that's President Trump. I think the key thing to think about here is, yes, it's so important that now it's, we can now move ahead with crypto, moving forward with the space, but it means massive supply. It doesn't mean the price is going to go up. And that's the problem. We have too much supply in this space, and that means pressure lower. So I point out Bitcoin has a much higher correlation to Ethereum and XRP and Solana and Dogecoin than it does the stock market. And guess what? All the correlations are positive, and stock market's going down.
Well, it's going to be interesting this next week, and hopefully we're back next week, next Thursday, folks. I want to thank these gentlemen for joining here. Socials are at the bottom. Please follow them, and it's certainly getting crazy out there. So we'll be back hopefully next week, and thanks for everyone tuning in. Talk to you soon, guys. Take care.